Hello, good morning to all, and welcome to a brand new week ahead. Today will be the Monday. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Very good morning again. Today will be Monday, a brand new week, 15th of January 2024. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this document or in this presentation, is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the short-term technical outlook on the broad-based cross-asset classes, that means i.e. the major stock indices, the major FX pairs, gold, and as well as West Texas crude oil, we will firstly have a recap on this cross-asset performance on last Friday, as well as the key data and event that took shape on Friday and as well as the weekend. So let us start with the cross-asset performance first. So over the cross-asset performance, what we could see is that the major broad-based US stock indices actually kind of a close almost unchanged, with the S&P 500 and the Nasdaq 100 managed to ink out a kind of a minor gain of 0.08% to 0.07%, while the Dow Jones Industrial Average and as well as the Russell 2000 underperformed with a minor loss of -3% to -2.3, negative 0.3%, pardon me, negative 0.3% on the Dow Jones Industrial Average, and the Russell 2000 closed on last Friday with a negative 0.23%. So one of the reasons that actually causes the Dow Jones and the Russell to underperform was due to they are much more composition of stock in their indices that are kind of more skewed towards the US financial. Why? Because the US financial actually underperformed on last Friday. So if you look at the heat map on the S&P 500 on last Friday, so what we could see over here is the financials actually underperform, with the diversified banks that actually closed close in the red on last Friday, due to the fact that on last Friday we do have the earnings release, the Q4 earning release of JP Morgan, Bank of America, as well as Citigroup. All of them actually came in below expectation, with Wells Fargo managed to actually be in line with expectation. So that causes that causes a bit of negative feedback loop being spilled into the US financials on Friday. But net, what we could see over here is that overall the mega cap continue to actually outperform. This is a 1 week performance. So you look at their 1 day performance. Let me very quickly go back to the 1 day. This is the 1 day performance. So the 1 day performance on last Friday is held rather relatively firm on the mega cap stocks, with the underperformance on the banks, which is the diversified banks within the financial sector. So, but overall, what we could see over here is that their risk-on behavior in the major US benchmark stock index has not been invalidated, because the Dow Jones Industrial Average, the Nasdaq, and the S&P 500 continue to remain firm above their short-term support. So later I'll touch on the short-term technical outlook on the Nasdaq 100 and the Wall Street 30, which is the Dow Jones Industrial Average. And also, one thing to highlight on Friday over here is that the PPI data is one of the so-called key component metrics to gauge inflationary pressure in US from the business side of the story rather than the consumer side. So the producer price index on Friday, let's look at the year-on-year one. All right, consumer price X food and energy and services. So if you look at over here is that, give me a minute, let me go to the calendar again. Yeah, okay, this one, core producer price index, that means excluding food and energy year on year. they came in below we call it much cooler than expectation, because market is expecting 1.9% year-on-year for December, and the growth continued to decelerate much lower than consensus, 1.8% year-on-year December, below 2% that was recorded year-on-year in the previous month in November. So we could see over here is that it's actually be in a acceleration trend. So you look at the 5-year. Okay, it's been decelerating below 2% right now. So this is the lowest level year-on-year growth in 2.5 years in terms of PPI, we call it business side inflation. So with that, right, that actually keep the US Federal Reserve, the Fed dovish pivot intact. So you look at the Fed fund rate right now based on the CME Fed Watch 2, that means i.e. taking into account of market expectation from the 30-day Fed fund futures market. So if you look at the first cut, it's still relatively higher in terms of expectation. So market expectation is now expecting a 70% chance that the US Federal Reserve, the Fed, will enact its first Fed rate cut in the March FOMC meeting coming this March. All right, 70%. So that's actually a slight increase from a week ago of 64%. So what we are seeing over here is that easing liquidity condition is pretty much alive in the market. So based on another metrics that I keep a close eye watch on will be the trend of the 10-year US Treasury yield. So you look at the trend of the 10-year US Treasury yield continue to inch downwards in the last 5 days, refusing to break above 4.06%, the key medium-term pivotal resistance level, also below the 20-day moving average. All right, and if you look at the daily RSI over here, okay, it's now trending down after a retest as the 50 level mark. So indicating to us that the downtrend, the medium term bearish momentum has starts to resurface back into the 10-year US Treasury yield. That means, i.e., momentum is actually now supporting a further potential decline in the US 10-year Treasury yield below the key medium-term pivotal resistance of 4.06%, indicating to us that easing liquidity conditions remains intact, which supports the ongoing risk-on movement in almost the major benchmark US stock indices, as well as globally as well. Later I'll share with you some of the global indices that I monitor. Then overall, the dollar remains unchanged on last Friday, together with the WTI crude oil remains unchanged as well. But however, the spot gold XAU slash USD continue to be firm as it's rarely close to 1% above the key short-term pivotal support of 2015 for spot gold XAU slash USD. And also that pretty much sum up of the key data that happened over last Friday. So with that, right, let's take a look at the short-term technical outlook. So the short-term technical outlook, let's start with the benchmark stock indices first. All right, starting with Asia Pacific over here, the Hong Kong 33 index. All right, so let me expand my screen right now so that you could see much clearer. So for the Hong Kong 33 index, no change. 16,100 will be the pivotal support level to watch. This morning it retested again right at the start of Asia session before shipping a bounce. So still maintaining that short-term bullish outlook for that minor corrective rebound above 16,100, managed to hold. The intermediate resistance to watch for sure will be at 16,500 in the first step, okay, which is confluencing with the downward sloping 20-day moving average as well. Only an hourly close above 16,500 may add a bit of impetus to see a retest at 16,950 slash 17,160. Only an hourly close below 16,100 will invalidate the Hong Kong 33 minor corrective rebound to expose the next intermediate support level at 15,500. All right, Japan 225 or Nikkei 225, very bullish. Do not fight the current ongoing bullish impulsive up move. So for sure, today's morning, it clearly break above last week high at 35,700. So with that, I'll be using a Titan key short-term pivotal support level for today, 35,360 on the Japan 225 to maintain this short-term bullish bias outlook towards the next intermediate resistance at 36,040. Breaking above it may see the next intermediate resistance zone to come in at 36,460/36,660. Only an hourly close below 35,360, which is the Titan key short-term pivotal support I have for today, will put this impulsive, we call it a bullish impulsive sequence on hold to see a minor corrective pullback to retest last Thursday or last week low, I would say at 35,000 level, which is also the psychological level as well. So still maintaining that short-term bullish bias outlook on the Japan 225 with a Titan key short-term pivotal support for today at 35,360 level. Now, European indices, the German 30. So German 30, no change. We still maintain that neutrality sense that we have on last Friday. That means sideways potentially between 16,790 and 16,560. Only an hourly close above 16,790 will potentially see a push up to test this, we call it minor range resistance at 16,970 level that is in place since 14th of December high. All right. Dow Jones Industrial Average, which is the Wall Street 30. So no change, Wall Street 30, yes, despite the fact that we see a kind of a lackluster US banks earnings from JP Morgan, Bank of America, Citigroup, and Wells Fargo, but it managed to help above the 20-day moving average and as well as the 36,380 short-term pivotal support level that we have since last Friday. So no change, still using 37,380 short-term pivotal support to maintain this short-term bullish outlook, heading towards the first resistance at 37,800. Very clearly, this is a clear range resistance that prevent the bulls from surpassing higher that is in place since the start of this year. Only an hourly close above 36,800 may see further potential upside to test the next resistance at 38,100 level. All right, so only an hourly close below 37,380 will invalidate this short-term bullish outlook on the US Wall Street 30 to kickstart a minor corrective decline towards the next support in first step at 36,170. So i.e. net overall still maintaining that short-term bullish outlook on the US Wall Street 30 as long as 37,380 short-term pivotal support holds. Nasdaq 100. All right, so no change. Nasdaq 100 continue to actually shape higher high above this within this minor ascending channel that I drew in light green that is in place since 5th of January low, and as well holding above the 20-day moving average since last Friday as well. All right, so overall no change. We could still see the Nasdaq 100 continue to evolve in a short-term bullish dynamic. I do not want to use last Friday low, which is at 16,762 as my short-term pivotal support. You can see over here a bit too tight, so I rather use this V-shaped level, this V-shaped minor reversal, which is at 16,660. Short-term pivotal support, no change. So as of last Friday, so 16,660 short-term pivotal support for the Nasdaq 100 to maintain this short-term bullish outlook. First resistance to watch will be the all-time high level at all-time high area at 16,990, followed by 17,080/17,120, which also confluence with the upper limit of this minor ascending channel that I drew from the low of 5th of January. Only an hourly close below 16,660 will invalidate this short-term bullish bias to kickstart another round of minor corrective decline to retest the next near-term support level at 16,400/16,430, which also confluence with the 61% PBoC retracement of this current impulsive up leg. Okay, over here. Okay, so overall no change, still maintain that short-term bullish outlook on almost all the major US stock indices that I covered, except for the German 30, which will be still maintaining that neutrality range stance for today. Okay, now moving on, next will be the FX market. So let us start with the European currency first. That means the euro dollar, the euro against the dollar. So no change, the euro dollar managed to help above the 1.0890 short-term pivotal support level that I highlighted, but still flirting sideways with the 20-day moving average. So bear in mind, this is trading view. So in trading view, we are able to plot a higher time frame 20-day moving average overlaying the hourly chart. So we are able to do multi-time frame analysis on a single chart, save time as well. Okay, so still hovering sideways above the 20-day moving average. So I do not want to use last Friday 1.9093 as my short-term pivotal support, still maintaining that 1.0890, which is confluencing with the upward sloping 50-day moving average as well. So still trading within this range. First resistance to watch for sure will be the 110 figure level that price action managed to trade below it since the start of this year. Only clearing above 110 level, that means the hourly close above it, sees the next intermediate resistance coming in at 110.60 in the first step. Only an hourly close below 1.0890 will invalidate this short-term bullish bias on the euro dollar to kickstart another round of minor corrective decline towards the next support level at 1.0890, which confluence with the 20-day moving average as well very closely, and as well as the the medium-term ascending channel lower limit, which is also confluencing very closely at the 1.08220 level. So net no change, still maintaining that short-term bullish outlook as long as euro dollar managed to hold above the 1.0890 short-term pivotal support level. The sterling dollar. So the sterling dollar is a much more evolving a much more bullish tone than the euro dollar. Why? Because it managed to shape higher low right above the 20-day moving average, and as well as the medium-term ascending channel lower boundary, which is at 1.26, slightly above 1.2690. So no change, still using 1.2690 as my short-term pivotal support level, similar on last Friday, to maintain this short-term bullish outlook on the euro dollar. First resistance to watch will be the 28th of December minus swing high at 128.20. Above it sees the next intermediate resistance coming in at 128.85. Only an hourly close below 126.90 invalidates this short-term bullish outlook on the sterling dollar, which is the cable, to kickstart another minor corrective decline to retest the range support level at 126 figure level, which is also confluencing with the upward sloping 50-day moving average. All right, so no change, still maintaining that short-term bullish outlook on the sterling dollar, holding above 126.90 short-term pivotal support. Asia Pacific currency. So let's start with the Aussie dollar, the Aussie against the dollar over here. So the Australia dollar, no change. We are still using 66.70/50 as my short-term pivotal support level, looking for at least a bounce to retest the minor range resistance of 67.40/66.70 level, which is this zone over here, and so corresponding with the 20-day moving average, acting as a near-term resistance as well. Only an hourly close below 66.50 level on the Aussie dollar will invalidate this short-term bullish outlook to kickstart another leg of minor corrective decline to expose the next intermediate support zone at 66 figures/65.70, which is also corresponding with the 200-day moving average as well. Dollar yen. So dollar yen continue to remain weak over here. Okay, going to remain weak. So what we could see over here is that I do not want to actually tighten the key short-term pivotal resistance level. So still using this 67. Okay, let me remove this level here. 147, pardon me, 146.70. So still using 146.70 as my short-term pivotal resistance on the dollar yen. First support level to watch for sure will be at the 143.45. This level is rather crucial in terms of inflection. Why? Because it corresponding to three different elements: the minor swing low of 9th of January, the 200-day and the 20-day moving average, all acting as coming to act as a near-term support at 143.45 level. So as long as 146.70 short-term pivotal resistance didn't surpass on the dollar yen, potentially we may see still maintaining that short-term bearish bias, with the first support level to watch at 143.45. Only an hourly close above 146.70, pardon me, above 146.70 will invalidate this bearish outlook, short-term bearish outlook on the dollar yen, to see a corrective rebound squeeze up towards the next intermediate resistance at 147.40 and even 148.30, okay, which is this resistance zone over here that are depicted on the hourly chart. Okay, so net still maintaining that short-term bearish outlook on the dollar yen below 146.70 short-term pivotal resistance. Now, what's next for the gold? So like I mentioned, gold actually managed to held above the 2015 short-term pivotal support level at the start of my presentation. So no change. This level is pretty key because what we start to see is a V-shaped reversal on last Friday. Now attempting to actually retest this near-term range resistance that managed to cap on the previous Friday 2 weeks ago, 1 week ago, 2 weeks ago at 5th of January, 2060 level. So as long as 2015 short-term pivotal support holds, still maintaining that short-term bullish outlook on gold above 2060, sees the next intermediate resistance coming in at 2090 for spot gold XAU/USD. Only an hourly close below 2015 will invalidate the bearish outlook on gold to kickstart another round of minor corrective decline within its medium-term uptrend, to expose the next intermediate support level at 1990/1975. Net, overall, still maintaining that short-term bullish outlook on spot gold XAU/USD as long as 2015 short-term pivotal support holds for now. What's next for West Texas Oil? So West Texas Oil, if you look at the hourly chart, it's going to actually flirt around the 20-day moving average. Last Friday, it hit our short-term resistance zone 74.95/76.05 before pulling back again, and right now attempting to actually recover from last Friday sell off by shaping a higher low. Okay, so with that, I do not want to use today's Asia session low as my key short-term pivotal support level, because price is still undergoing that wild gyration or whipsaw around the 20-day moving average. So there's still no clear signs of we call stabilization around the 20-day moving average. So I'm still using 71 figure level as my short-term pivotal support level for today. So what's 71 figure level? Minor congestion area from 9th of January to 11th of January, as well as the minor ascending trend line support that is in place since 13th of December, minor swing low. So as long as 71 figure level holds, potentially West Texas Oil could see another retest at the near-term resistance zone of 74.95/76.05, which also correspond very closely to the 50-day moving average, and as well as the minor swing high of 27th of December. Only an hourly close below 71 figure level will invalidate this short-term bullish outlook on West Texas Oil within this range configuration to retest the minor swing low area of 3rd of January at 69.70 level. All right, so that's the outlook for West Texas Oil, still maintaining that short-term bullish outlook within a range configuration as long as it holds above the 71 figure level. All right, so what's the key economic data to look out for today? So just a while ago, right early today's Asia session, the China Central Bank PBoC maintained the 1-year benchmark medium-term loan rate, where this is actually a medium-term loan facility where a major Chinese bank is able to lend from the PBoC, still maintaining at 2.5% level. All right, so what we could see over here is that the stance from China Central Bank, they are still in no rush of enacting what I call a much more forceful monetary policy stimulus in play. Okay, then throughout the US session over here, we do have industrial production for the month of November out in Eurozone later at 6 p.m. Singapore time. Then on top of that, it will be a rather quiet session. Why? Because do not forget, the US stock market today is actually closed for a public holiday. Okay, they actually closed for a public holiday. So with that, that's pretty much sum up from today's daily dose of market insights, and we shall speak again tomorrow. Thank you.